Hello everyone, my name is Horvat and welcome to a new free video in which I will share with you my view on the US dollar and euro. Now, before I will take a look on the euro, we will go through dollar index, and here I'm having a weekly chart which I'm tracking a very big complex upward correction from 2008 lows. But more important is that we have a very nice pullback here on dollar index from March highs. Okay, now before we can identify this pullback, we must look at the previous structure. Now notice that this rally from 2014 to 2015 highs was very strong. Usually this strong move will represent wave 3 within an impulsive rise, because wave 3 is typically the strongest and powerful wave, which definitely was this move up from 78 figure. So if you identify wave 3 as a very strong move, then you can be sure that upcoming pullback will be only temporary, ideally wave 4. So I think that this is just a temporary correction and that we will see higher levels for a wave 5. Now also notice that this pullback, okay, if I zoom this in, this pullback is now in play for for 25 months, weeks, okay? And you can see that we have seen a pullback for only 38.2% compared to previous very extended move which lasted around 36 weeks. Okay, so you can see that pullback is very slow compared to previous strong upward reaction, which means that this is a correction and that this is an impulse. So this was a 5-wave move, this is a corrective move. So with that said, we can assume that sooner or later dollar index will move back to the highs. And if we take a look on this substructure, you will see that there is no way to count this in impulsive fashion. So if you cannot count the move in 5 waves, then it can be only a corrective move. So I labeled it as a complex correction, a combination WXY that can be finished, okay, because we have seen a nice move towards these previous swing lows, where we have seen a fade breakout, okay, and then a reversal to the upside. This is very nice psychological reaction. A lot of stops were triggered here and market turned back to the upside. Also, if we take a look on smaller time frames, you will see that we can count 5 waves to the upside from this low. A 5-wave move is a very strong indication for a change in trend, okay, and or continuation within larger uptrend, like in our case. So I see here a 5-wave rally that confirms stronger dollar, which means that I will be expecting more upside, but after every 5 waves, market will make a corrective retracement. Well, I'm looking here for a wave 2 pullback. Usually wave 2 will retrace at least 38.2%. Ideally, we will see a pullback even towards 61.8%, but only in a very strong bear market or bull market you will see a retracement less than 38.2%. Okay, but since I'm expecting wave 5 to unfold, I don't think that we will see any aggressive, very strong buying directly from here. With that in mind, I think that wave 2 can still make a pullback for 38.2%. I would definitely love to see this level tested before I may consider some buying for a red wave 3. Okay, so I will be looking for more downside here into my fib level support. Let's say with numbers 94 region up to 95 is ideal zone for completion of wave 2. Also, I'm looking at stocks market. The S&P 500 and DAX are trading lower. I see more downside to come, and if you consider recent correlations, dollar is up with the stock market. So if the stock market is down, okay, you would expect the dollar will be also down. But because I'm expecting more downside on stocks, I think that the S&P 5 that dollar index can still make some pullback to lower levels. Okay, but once the S&P will find a bottom and turn back to the upside, back to the bullish mode, I will be expecting dollar index to break much higher. So if we are bullish on dollar index, we should expect euro dollar to move even lower. So here we will take a look on daily chart. I labeled this very overlapping price action as a very simple structure, actually, as a three-wave move, not five-wave move. I labeled it as an ABC move with a triangle in the middle, which I labeled it as a wave B. So actually this is a corrective movement that for me appears completed because of very nice reaction from the highs. Also, this was a nice spike here. If we take a look on weekly chart, weekly candlestick formation, you can see that we tested this 50 period moving average, and nice reversal candlestick was formed last week. RSI is also around 50. And MACD is approaching towards this zero line, which means that we are actually at very nice area for a possible new continuation to lower levels. In fact, on the 4-hour chart, we have this 5-wave decline, okay, from above 1.17. So I'm looking this to be a wave 1, and I'm expecting wave 2. Now this trend line support connected from start of August is very important. For now still holds here, so I think that the correction is unfolding. We could see another test of this support line and then bounce to the upside towards 38.2%, same as I expect on dollar index, this 38.2% retracement to be tested. And after that I will be looking for a nice move to the downside. Okay, for now this correction it looks complex, but still not enough deep for me to look for shorts. Okay, but if we'll see a decisive break to the downside for the former swing lows around, this was around 1.150, if we'll be able to take this out with a daily close beneath this level, then I would be considering end of a wave 2 here and would be looking for straight move to the downside. Okay, so all in all, euro dollar is looking bearish, dollar index is looking bullish, obviously, but the S&P 500 and DAX are still showing room for more weakness, which could allow that euro dollar will make more complex and higher pullbacks here, while dollar index could reach slightly lower levels before real dollar buying will come in. Okay, now if you're interested in more analysis, make sure to visit our website ew-forecast.com. we have a lot of things to offer, and if you are our new potential member, you can get first month for only €1. Okay, so thank you for your attention, and I will see you on Friday with our new free update. Bye.